So, now let's move on to our first presenter. And that is Ben Lee. Ben is a medical imaging software systems analyst at the Palo Alto Medical Foundation. He is also in his second year pursuing a master's degree in healthcare administration at California State University East Bay in Hayward. Ben has had chronic kidney disease since the age of 5 and received his second transplant in 2002. From his own experience, his own research, and the coursework in healthcare public policy that he's completed for his degree program, Ben would like to share what he has learned about options for obtaining insurance coverage when you have a chronic pre-existing condition, and also how this is to be affected by the Affordable Care Act, or otherwise known as healthcare reform. Ben, welcome.
Hi everyone, and thanks. Can everyone hear me?
Yes.
Okay. This is a subject near and dear to my heart because I've spent a good deal of my life pondering this issue. So the discussion that I'm going to talk about is really the answer to the question, well, have you ever been diagnosed with any of the following? Which, if you are trying to personally purchase insurance in the private market, you'll inevitably be asked that question. And for people like myself, and for quite a number of you, I think the answer is going to be yes. So how do we deal with this? So, and there are currently quite a few options, so I'd like to go through these. Before I get started, I think you've heard some of the discussions already. I've been diagnosed with chronic kidney disease since I was 5, so I'm a professional. Okay? I've been doing this for a while. I was initially transplanted in 1982, and I had my most recent transplant in 2002. Scott went over my professional credentials. Please note that I'm not a specialist in healthcare finance. I'm very happy that I have my fellow panelists here to steer me correctly, and to please feel free to jump in if there's additional things that you can tell me or correct me. I welcome the input, and we should all share the information. But the main thing is this is based on my own research, and it's just the information that I want to share with the fellow members of my CKD community. A disclaimer, although I do work for the Palo Alto Medical Foundation, these are the results of my own personal research and my own opinions, and in no way represent the views or the positions of Sutter Health and its affiliates, including the Palo Alto Medical Foundation. So with that, should you be concerned? I mean, a lot of you have healthcare pre-existing conditions, but is it something that you should be concerned about? And the answer is no. Not all of you really need to be concerned about this. Fundamentally, if you are entitled to Medicare, which is if you're over 65 years of age, or you have a diagnosis of ESRD or are on dialysis, you are eligible for Medicare. And that is, you are now essentially protected. Also, if you are military or a veteran, and you're of that family, and you qualify for the VA, you also do not have to worry about this. Other options are, if you are a child or you have a low-income family, and because of your financial positions, you qualify for Medi-Cal here in California, essentially Medicaid. These options will help you get insurance. There is a theme here, is that if you are suffering under the so-called socialist medicine, for essentially these are government-run programs, you are covered. However, if you're someone like me, where you are essentially reliant on private sector insurance coverage, in my case, and in the case of a lot of people here, that you are reliant on group policy, employer-based group policy, which is most of us get our insurance through, and you're concerned about the status of your employment. If you think you might lose it at some point because of your employment status, or if you are a young person that as of now, you're currently covered under your family's plan, but you're going to age out of it after the age of 26, where you're no longer eligible to be covered under your family's plan. Or if you're a low-income childless adult, that you're older than 26 but younger than 65. And because you're a single childless adult and you're a low income, you're actually not eligible for Medi-Cal. I have personal family members who are in this status and some friends. So, this is also, if you're forced into the individual market and you don't have access to group insurance policy, and you don't qualify for any other government programs that guarantee insurance. And of course, if you have the pre-existing conditions that we're discussing. We're talking about what are these pre-existing conditions? What are we talking about here? There's a certain level of refinement. I mean, the definitions may differ depending on each policy. So there's not a clear sense of what exactly is or isn't. And it does not necessarily mean automatic denial. There's major conditions that, in my case, if I had kidney transplant or ESRD flat out, it's virtually impossible to get individual coverage in the private market. But you may have, and some people may have, minor pre-existing conditions that, based on discussions with your carrier, that you may qualify, but it may affect your premiums and it may cause them to increase. The list is long, and there's a link that you can have a look at that tries to collect all this information. In front of you, you should have a handout that says important websites for the uninsured. I encourage you to visit those links. This is, I think, one of them at the bottom. How many are affected? Obviously, I think a lot of us in this room are, but I haven't really been able to find any specific numbers. According to the Department of Health and Human Services survey recently in January 2001, there's 129 million Americans that have some sort of pre-existing condition. But please note that kind of overstates the problem. Because just because you have a pre-existing condition doesn't mean that you can't get insurance policy. A lot of these people have access to group policies, or you qualify for other programs. So the numbers are hard to say, but I mean, as far as this community is concerned, myself and a lot of you, you would have this issue. So, why are they doing this to me? Why are they denying me coverage? And I think for some of you, the issues that may be completely obvious, and at the risk of being Captain Obvious, it's not something that we should gloss over. I want to cover it briefly because later on, this will become important. And I want to emphasize, this is not a simple story about, the insurance companies are being greedy, okay? There are some legitimate reasons, if you think about the concept of healthcare insurance. The key factor here to understand is the concept of risk pool in insurance terms. The idea is, of course, in any kind of a group that you're insuring, you want to have a large number of people who are healthy and you're collecting premiums from them, and you don't have to pay for their health care. And a small group of people that the large group of people is going to be paying for. And you need this risk pool to be as large as possible, and you need to have the right ratio of people who are healthy to people who are actually consuming healthcare services. And yes, the industry does engage in, this is an example of what they call cherry picking. You want the young and healthy people. I mean, the ideal risk pool is the employee population of Facebook and Google. Okay? I mean, if everybody in your risk pool is 25 years old and you think you're immoral and you're all high income, I mean, that is the ideal insurance coverage risk pool. But the problem is young people as a rule, of course, they think they're immoral. They don't think they need healthcare insurance. And they also tend to be lower income, so they tend to not participate. And because of this, you need to have, if you have a situation where if you just outlaw the denial of insurance to people with pre-existing conditions, then you get into this concept of the insurance death spiral. And if this were to occur, then we have a major issue. Because what happens is, if by law, you are forced to provide coverage to anybody who asks, and you are not allowed to turn people away because of pre-existing conditions, then here's what's going to happen. All of us will say, hey, I need coverage. So you get a room full of people with chronic kidney disease on there, and their costs are immense. This causes the premiums for the entire group to go up. And at this point, the people who are healthy will say, well, my rates are going up. I'm going to drop the coverage. And so, and then so you get into this spiral where more and more healthy people are forced out of the pool. And eventually, this is not sustainable, and your system is going to collapse. I mean, it is difficult for us as a patient, but this is a natural consequence, and this is why it happens. And it's important to bear in mind when we discuss this later on. So let me move on to sort of the core of it. So what are my options? If you are a person who, again, you do not have some sort of a government coverage and you're reliant on private insurance, here are some of the options you have. You have eligible for coverage under the COBRA and HIPAA laws. If you own a small business, that is an option you can pursue. You have the option to join the California Major Risk Medical Insurance Program, or MRMIP, where it is essentially a program dedicated to, California program dedicated to people with pre-existing conditions. Or a very newly created state pre-existing condition insurance plan, PCIP, and I'll get into that at the end. So let's go over these. COBRA and HIPAA are both previous efforts at health insurance reform. COBRA dates from 1986, and HIPAA dates, is from 1996. Essentially, if you have existing group coverage, if you're currently covered under your employer, and you lose your job, you have some sort of qualifying event, like you lose the amount of hours you have, and you're no longer eligible for group coverage. Federal law requires that the employer give you the option of continuing that group coverage, and they can't deny you because of pre-existing conditions. It is your choice to sign up for this or not. Okay, you have 60 days to decide. And you can obtain coverage for up to 18 months, sometimes up to 36 months. Like, actually, my mother-in-law is covered under in-home health support services, and in her case, she can actually extend it for 36 months. So, your individual circumstances may differ. It's extremely expensive because you are not just paying your portion, but also your employer's portion. I'm not exaggerating when I say it can be up to $1,000 a month for yourself and your family. There may be options that we can pursue, and I'm glad that Sandy may here to kind of help us with some of this. But it is an option. If you can afford it, it's something to consider, and I've been on it myself. Now, what happens after 18 months? Well, everyone knows about HIPAA in terms of privacy, but part of that is the Insurance Portability Act, okay? So essentially, if you had continuous group coverage for 18 months prior to losing that, you are eligible to continue coverage under this HIPAA law. And again, you can't be denied coverage. However, there are premium adjustments, meaning that, again, it's an extremely expensive option. In both these cases, you can afford it, it's an option, but the cost is a concern. So, moving on. If you have a small business, you can purchase group coverage for, just tailored for business for you and your employees. Or in some cases, like again, I have personal friends who've done this. They are a business of two, my friend and his wife. So essentially they have group coverage of two. Again, it is very expensive. In my friend's case, they're paying $2,000 a month for this group coverage. Again, if you can afford it, it's an option in the sense that, you can be guaranteed coverage, but they'll adjust your premium based on your pre-existing conditions. But you won't be denied. The next two are the ones that are a little bit more affordable because they're heavily subsidized government-sponsored plans. This is the California High Risk Pool. This is currently in place and it predates healthcare reform, okay? This is essentially a program for people with chronic diseases and that are very high risk that cannot obtain coverage. And it's California government sponsored. And here's the website, and the link is on the important links that I've given you in the handout. There's some basic requirements. You have to be a California resident. You are not eligible for COBRA, okay? That's one thing. And you're not eligible for Medicare or Medi-Cal. And you essentially have no other options. But it's a very long wait list. I don't know exactly the status of the wait list. Again, please do your own research. That said, this is an option. And this is the new one. This is a portion of the Affordable Care Act, or otherwise controversially known as the Obamacare. This went into effect, I think, middle of last year, but I could be wrong about that. But the important thing is that this is a temporary program that only lasts until December 31st, 2013, and it's a bridge to 2014 when the full implementation of the Affordable Care Act come into play. To qualify, you have to not be taking part in any of the previous programs that I've talked about. And one important thing I want to point out, and I don't want to blind anybody here, but this is an important point. You can only qualify if you have not had health insurance for the previous 6 months. So you have a gap there that's a little bit difficult. Okay, so this is something to consider. And this is a brand new program. There's a great deal of unknowns. I'm not exactly sure about the cost and the premiums relative to the MRMIP. It's controversial, okay? The current political makeup of the House has made it part of their campaign promise to defund healthcare reform. This relies extensively on that. So the status of this program is up in the air. And then, of course, there's a whole issue of the controversy over Obamacare. Okay, so there's some constitutional issues that we can talk about a little bit later about. So in summary, these are all temporary options. Because, and these are the things we just went over, but really 2014 changes everything. Maybe. Dun dun dun. The dreaded Obamacare. 2014 is the full implementation of the Affordable Care Act. And what's relevant to us in this room and for this topic is that under that act, the denial of pre-existing condition as a condition for coverage is outlawed. Okay. And there's a great deal of other things that will benefit us, and such as state-based exchanges. We can purchase insurance at a discount. It's a marketplace. You can purchase coverage from private insurers. There's expansion of the Medi-Cal program so that if you are a childless adult, previously you could not qualify for Medi-Cal, now you can qualify for Medi-Cal. The idea is that to try to expand that risk pool that we discussed earlier to the entire population of the U.S. The most controversial portion of this is the so-called individual mandate, which is that all individuals must have insurance. Now, I know you've heard that in the public discussion that says everyone must buy insurance. And generally there's a feeling that everyone's required to buy some sort of government-run coverage, but that is not the case. The requirement is that you must have insurance. So in other words, if you're covered under some existing plan, if you're covered under your employer's coverage, if you're covered under Medicare, if you have some sort of coverage, then you've already met the qualification. But however, that said, it does require you to have it. And for many people, you must, under the law, purchase insurance, and that is a very controversial subject. Now, there's also things about healthcare reform that, as CKD patients, we will not like, including there's a great deal of cuts to Medicare. This is not as, it's a very complex issue, and I don't want to get into all that now, but we can have to talk about it later. And of course, there are tax impacts. There's no free lunch. And again, we can discuss that. But the key thing is, it's very controversial. There are many unknowns. And this law is evolving. even as we speak, Congress is making adjustments and tweaking. So this is a fast-moving topic. And if you're interested in this, I highly encourage you to visit that website, again in the handout. The Kaiser Family Foundation has the best summary of the law that I've been able to find. So if you're interested in this topic and you are looking for a nonpartisan, very factual-based source of information that doesn't try to really sell you on the program or try to scare you about the program, I would say that that's a very good neutral resource for you to look at. And it's in the link in the list of things that I provided you. So I want to kind of move along this a little bit, but the individual mandate is essentially that, as we discussed earlier, you want to expand this concept of risk pool that we talked about earlier to the entire country. Because otherwise, if you mandate that everyone, if you mandate guarantee issue, which is the technical term for like not denying people based on pre-existing condition, otherwise the entire private insurance system will go into a death spiral. And my personal observation here is the potential irony that the provision that people not be denied coverage for pre-existing conditions is extremely popular. Everyone is against, there's a lot of people, at least 40–50% people, very much against healthcare reform, but they like this concept. I think the irony might be, and this is again a personal observation, is that if the law were struck down, in another sense that if the individual mandate portion were struck down, but people still want, people want their cake and eat it too, they still want the guaranteed coverage, you might put the private insurance industry into a death spiral. You might end up with the dreaded single-payer government-run healthcare program for everybody. I don't know. That's I think that's a potential irony, but so much of this is unknown that it remains to be played out. It's sheer speculation on my part. And it's, again, subject to shifting politics. The individual mandate portion, which is a major leg of all this, is under judicial review. It's possible that the Supreme Court might declare it unconstitutional, that doesn't necessarily break the whole program. There may be other options, but that throws a big monkey wrench into this whole program. Unfortunately, Americans remain very divided over the issue. There's efforts to repeal it, but I think that politically the 2012 election year is going to be extremely important because we decide, right now the President and the Senate will stop any effort at repeal, but of course those are always in play. So where does that leave us? We can only live in the present. I mean, we have a possible idea for what the future holds, but these are the options that you have. So, but the one thing is, if you have coverage, keep it if you can, as long as you want. Thank you.
Our next speaker will be Betsy Bucter, who has served as one of California Pacific Medical Center's kidney transplant coordinators since the year 2003, where she provides education and nursing care to patients with end-stage renal disease. Previously, she was a nursing instructor in Montclair, New Jersey. Betsy has more than 20 years' experience providing nursing care and health education in many clinical settings. She received her Bachelor of Science in Nursing from the University of Rochester and her master's degree in nursing education from Columbia University in New York. Today, Betsy will discuss financing a transplant.
Yes, I will. Hi, thank you, Scott. So, of course, you're probably listening to the bio and thinking, what the heck does she know about financing a transplant? So I must, my legal disclaimer is that I'm not a finance expert. However, I'm filling in for several of our financial coordinators and social workers. And I do actually have quite a bit of experience in this area, as all of the patients that come through our clinic for evaluations and post-transplant appointments, I can handle the medical part very, very well, but I've seen so many patients where medically they would be wonderful as transplant candidates. However, they have so many financial obstacles, and so I've learned initially kind of dragging and kicking, dragged and screamed into the whole process. But we have learned about some of the options, how the system works, and I hope to be able to fill you in with some resources that maybe you weren't aware of before today. So I have 2 handouts that I brought. The first one is the PowerPoint notes to the slides that I'm going to go through. And then the second pile has, the top sheet talks about answers to finance questions on transplant. And this is the appendix. This is kind of like a guide of little cheat sheets, helpful resources that our patients have found to be immeasurably helpful in this whole process. So I also wanted to give you the contact information for our transplant social workers and finance coordinators. I'm not sure if you're on California Pacific's. For those of you who are on the transplant list, I'm not sure if you're familiar with our program. I see a few familiar faces here, so I know that some of you are. And so if you are and you have questions related specifically to your situation, your financial situation, you can contact our social workers, caseworkers, and financial coordinators at any time. They're happy to help you with this process. So, the basics. As Ben mentioned, he kind of gave you an overview of Medicare coverage for all of end-stage renal disease, but this is more specific for the transplant. So who pays for the transplant surgery? Medicare, Medi-Cal, private insurance, and then I also want to spend some time in a few slides down the road on some of the out-of-pocket costs and the possibility of fundraising. And when people come for their very first evaluation to learn about transplant, we like people to start planning down the road for what happens after you get the transplant, what happens after the 3 years, which I'll explain in a minute. And so we have resources to help people in all these different areas to make the transplant more affordable. And so when many people see or find out that they're covered by Medicare and that Medicare handles a huge proportion of the transplant dollars, this is kind of the response. It's like, hello, is there anybody in there? How does this work? And it is. It's like a complicated maze. So I'll try to simplify that a little bit for how it works for transplant. So for if you have Part A, and there's usually no monthly premium, that pays for 100% of the hospital stay for the transplant after any deductibles that you might have. Part B, there is, generally speaking, a monthly premium, pays for 80% of the doctor's fees and 80% of the transplant anti-rejection medications in most cases. So, it looks pretty good up there, and most people say, well, why isn't Medicare enough? And as I go through the next few slides, you'll see why and how the bills can add up quite substantially. Many people will also have Part D, and we encourage you, and our social workers and financial coordinators will help you to figure out what your specific Part D coverage is as it relates to the immunosuppressive medicine after transplant. And also, beware of the donut hole. And I'll explain that in a minute, because that is a big financial pitfall for many people. However, the biggest, it looks good up here, but then Medicare, as the rules stand right now, it only offers coverage for 36 months after the transplant for these medications. So that's 3 years, and after 3 years, you'll need to find other coverage for those medications, unless at the end of the 3 years you're older than 65 or you have another disabling condition, which can apply to many people. And so this was the best slide that I could find to explain the donut hole. Previously, before this, I would hear the donut hole and I would get lost in these visions of delicious donuts, the sugar, the sprinkles, and then whatever explanation would, this is part of Sandy's presentation as well, so I'm off the hook again for explaining the details of the donut hole, but she will explain that in great detail, and the model for how it's explained falls nicely into the picture of the donut, so this is in your pack so you can refer to this later on. Okay, so what if you don't have Medicare? And many times when people are first seeing us getting on the transplant list, and I don't know if you can see it from far back, but the lady's looking up and there's kind of a little blank thing, and that's the reaction of many of our patients. If they don't have Medicare, they have absolutely no idea what they're going to do. So Medi-Cal is an option for many of our patients. That's based on income. However, many people will have monthly share of cost and prescription co-pays with that. And you'll still need prescription coverage afterwards. Private insurance, such as employer groups, private plans, the high-risk or Mr. MIP plan that Ben described, veterans benefits, retirement plans, these all can offer insurance. And we do encourage people to contact their health plan for more details. However, many people are still in the, well, I don't have any of these, what do I do? And so that's where our financial coordinators and social workers can help out with this whole process to help you come up with more ideas, creative problem solving to see if you are eligible for some programs that you didn't even know about. And so this next one comes as a shock to many people who are waiting on the transplant list. And the medication costs, and many people say, well, I have Medicare, it covers 80%, isn't that enough? Well, without any insurance coverage whatsoever, the actual medication costs for someone who's newly transplanted are more than $4,000 per month. And so the Medicare copay is going to be this was calculated by our financial coordinator, at least $467 a month. That's just for the basics. And if you're on other medications, such as medications for your blood pressure, medicines if you have diabetes, antibiotics, which you'll be on initially, those will also add up to a fairly significant amount. And then also remember that unless you're 65 or have another disabling condition, that you'll be required to keep up with these payments on the medications for as long as you have that transplant, which hopefully is a very long time. So I wanted to add this in because it has to do with Part D. And I don't know if any of you are enrolled in Medicare Part D, but this is the age times MC squared, milligram dosage versus purple pills, minus the little prescribing physicians thing, and there's something on the bottom of number of aches and pains divided by your height, and congratulations, you've enriched the drug industry. So we wanted to offer some assistance, some ideas for assistance to deal with medications afterwards. So here in the packet, and this is all in your handout in two places, so these are the phone numbers for all of the medications that people commonly take after transplant. And there's also, in the second handout, there is a description on exactly how the pharmaceutical the patient assistance programs work, and also more information about each one of these drug companies. And last but not least on this one, I found a wonderful website that's kind of like one-stop stopping for anyone who needs assistance with medications. It's medimeds.org, and it was founded by a physician in Massachusetts who discovered that many of his patients were not following up with recommendations on medications merely because they couldn't afford the medications. So this has, you can search by diagnosis for all the things that might be applicable in your situation. You can also go straight to the different, there's a formulary on there, it's divided up by alphabet. You can click on, like P for Prograph, and it tells you there's 3 different resources that you can possibly use for funding for Prograph. And then the other thing that I really liked about this one was they also include, they have a calculator on there too, because a lot of the eligibility for the drug companies, and it seems like each one is different, is based on a financial calculation. And it's like for Prograph, for example, you can qualify as if your income is up to or less than 300% of the federal poverty level. And so I looked at that and figured out, okay, if it's for Prograph, to be eligible in some way for assistance on this, you can make up to $1,200 a week and still be eligible for some assistance in Prograph, and it's done by a sliding scale. So I thought this was like the most helpful website, and it has all the medications on there, not just for transplant, and it has all of the assistance programs that are may be eligible for.
Betsy, could I interject for a moment? Back here on our information table, we do have a matrix that Ben found for me, but inside this handout, please take one. There is the chart of the federal poverty level.
Oh, great.
For those of you that don't have access.
Very important.
Great, it's very important, because a lot of people think that they might make too much to qualify, but yet they're still struggling to pay for their vacations and eat at the same time. So it's important to be able to have this chart, or at least be able to find it where you can utilize it. So we have many patients that have Medicare, and maybe they don't have or are not eligible for Medi-Cal, or maybe their share of cost for the Medi-Cal portion is not affordable, or they have private insurance where their co-pays are still just too much. So many of our patients have done some fundraising to help make this whole process more easy and less stressful. And so the two foundations that we've utilized are one of which is National Foundation for Transplants, and the websites and the contact information are on here, and the National Transplant Assistance Fund, and the website is also on here. And I had a patient recently who, I don't remember which one of these he utilized, but it was so successful for him that he was able to come up with the money that he needed for his own to help the co-pays and the portion of the doctor's fees, that he was able to raise enough and identify another patient that he could help. So just for this gentleman doing one fundraiser, he was able to incorporate helping out another individual as well. It does require quite a bit of motivation and follow-up initially getting started, but if you contact these folks, they can really do a good job guiding you through the process. Living donor issues, I just want to touch on this briefly. Many of our patients do have living donors, and we want people to know, and the first question that comes up before they start any of the medical workup is who's going to pay for all this? So all of the medical costs are covered by the recipient's insurance, so there should be no bill generated for any of the living donors. It should all be done by the recipient's insurance or the transplant centers. However, there can be other costs and lodging, travel, incidentals that aren't covered. So this is a wonderful option. It's the Living Donor Assistance Program.org, and they offer they've been tremendously helpful for many of our donors, especially if they're coming from out of the area. Helps with the travel costs and staying in San Francisco the night before the surgery, that kind of thing. And so if there are financial barriers when you have a living donor, we encourage you to contact your transplant center social workers to help with the problem solving, because there are, believe it or not, even in these tough times, there are resources for this. And disability pay, I'm not sure if any of you are touching on the disability. I'm not going to go through this in a lot of detail, but generally speaking, for transplant, for both the recipients and the donors, the disability pay is up to 6 weeks. There are state disability programs, family leave programs, paid family leaves, and there's also private disability. So we do encourage you to contact if you're employed, contact your employer, or if you're not sure about this, contact your transplant social workers and they can help guide you through that. And then if you're already on disability, you'll be contacted by Social Security after transplant. They review your medical records and decide whether you're still disabled. And if, in fact, you're not still disabled, this can cause a lot of financial stress for people, because if you just have Medicare, you're going to be, or Medi-Cal, and you're no longer considered disabled with the new transplant, you're going to be on the hook again for all the medication fees. So we like people to start planning from that very first evaluation appointment. Look at your situation, we'll help you, and we'll give you these different options to help fill in the gaps to make the stressful piece as easy as possible. And considering all this information, sometimes it seems like the actual transplant surgery is easy compared with navigating all of this stuff. So I did want to include another helpful website on here, transplantliving.org, which they have a whole section on financial issues and they have close to 100 different websites. And these are, remember when you're looking at websites and you're Googling stuff, you want to go for the ones that are .org or .gov. Usually the ones that say .com have some financial interest in mind and may not be the most reputable. So transplantliving.org is run by UNOS or in concert with UNOS. And so all of the websites that are listed on there are reputable websites, valuable resources. And that's it for me, and I just wanted once again to have you sometime today, or when you get home, to look through the second part of the handout I gave you. The first page is answers to the finance questions you might have about transplant. The second one is more details about the medication assistance programs. The third one is getting back to work. Many patients will be expected to go back to work after that 3-year period after transplant. So there's a helpful guide on here and also some helpful websites. And the next one are some more helpful resources regarding transplant. And then last but not least, if you're on our transplant list, I have our contact information for our transplant team, so you can contact us at any time. Thank you.
Our next speaker is Sandy White. Since 1982, Sandy has been employed with Allied Brokers, an independent insurance agency providing personal, commercial, life, health, disability, and long-term care insurance. She provides individual and group health benefits as well as life insurance. Sandy's main focus is providing individual and family health insurance and helping families find plans that suit their medical needs as well as their financial ones. Her client base extends from Marin County to San Diego, and today Sandy will help us help to demystify insurance in the world of healthcare. Sandy, welcome.
Thank you. Well, first of all, I'd like to thank Ben because he hit upon a lot of topics I was going to discuss. And for someone who doesn't sell health insurance, you really know a lot about it, so you're to be commended. I was going to discuss all forms of health insurance, but I think primarily most of you know the difference between PPO and HMO, and high deductible plans and health savings accounts. So in order to save some time, I think I'd like to talk to you primarily about COBRA and what happens and who's entitled. Clearly you know that when you're employed and you terminate your employment, whether they terminate you, you choose to terminate, whatever, you are eligible for COBRA for 18 months. I do run an ad in the paper that says, are you paying too much for COBRA? And most of my phone calls are, yes, I'm paying $2,000 a month or whatever. Clearly, if you have no serious medical conditions, we suggest that you try to get off COBRA and get your own insurance because it's going to be a lot less expensive. Plus, heaven forbid something should happen to you while you're on COBRA, you would probably then not be eligible to get your own insurance when COBRA ends, and you'd have to go right into a guaranteed issue plan. You can also have COBRA for 36 months if there is a death or divorce in the family. So it's called a qualifying event, and there are some qualifying events so that you can have 36 months. Assuming that you have a medical condition, and I'm here to tell you that it doesn't take much to be declined health insurance nowadays. Being a kidney transplant patient or recipient is nothing compared to taking 3 medications for one condition or just having had knee surgery and having a pin in there. It's just unbelievable, and I see changes every year, and it just boggles the mind. I remember when I first started, they had exclusions. So, you know, if you had a bad knee, they'd exclude that for 1 or 2 years and cover everything else. Well, those days are long gone. they call it discrimination. So you really do have to be in good health to get health insurance. Now, there are conditions which you could have which would not preclude you from getting a policy, but they would increase your premium considerably. I have a family right now who's paying $4,900 a month for individual health insurance. And I tried to get them switched to a plan that was less expensive. And I was told that because the father had 3 or 4 conditions and the mother had 2 or 3, they would switch them to the plan that I had recommended. But it was going to be $9,000 a month for the mom and dad. And then each of the 2 children could be separate, and that would be $145 a month. So clearly, there is a huge, huge problem in individual health insurance, which I see it getting worse and not better. Premiums are going up, benefits are being cut back, maternity benefits for people are virtually non-existent. You have to have a very high deductible and no benefits until you meet that deductible. So things are changing, and in my estimation, they're not changing for the better. I know it's my job to sell health insurance, and it's getting more difficult each day because pretty much everybody I see has medical conditions. You can tell some people right from the get-go, I'm sorry, there's nothing I can do for you. Others you have to call to see, you know, well, they have this, this, and this, and do you think it's possible? So, I don't know where it's going to end. I don't know if Obama's health care law is going to help, hinder, I have no idea. I do have personal opinion about it, but I think I'm going to keep it to myself for the time being. When you have COBRA and you've maxed out your COBRA, whether it's the 18 or the 36 months, as Ben said, you are eligible for a guaranteed issue or a HIPAA policy. Every carrier who provides individual health insurance must provide a guaranteed issue policy. And they don't ask medical questions, they don't care, they know there's something wrong with you. The only requirement is that you have what's called a certificate of creditable coverage, which shows that you have had 18 months of coverage. Now, unfortunately, these plans, you can't pick whatever plan you want from Aetna, Blue Cross, Anthem. They have specific plans for HIPAA recipients. So you can have a $5,000 deductible with $30 copays, or you can have a $4,000 deductible with no copays until you spend $4,000. So yes, there is insurance for people, but it's not what you might need at the time. It's not going to give you all of the unlimited office visit copays, all the drug, et cetera, et cetera. It's going to be a big deductible for brand name drugs. In addition, the costs can run anywhere from $400 for somebody in their 20s to over $1,000 for somebody who is under 64. There's a $75,000 annual maximum benefit, which is nothing for somebody who has a serious medical condition. And there's a $500,000 lifetime benefit. So, you know, we encourage people, if they can, to go get a job at Home Depot or someplace just to get 30 days of insurance and then take COBRA again. And there are people who are doing that. They're going from job to job just to get the insurance and then taking COBRA. It's difficult, yes. Part D, Betsy talked about Part D. You all know about Medicare, of course, A and B, and you all know about Medicare supplements, which pick up the 20% that Medicare doesn't pay. So quite frankly, those of us who have Medicare A and B in a supplement are really very lucky. We're sitting pretty. I have people come in and say, oh my God, Sandy, I'm going to be 65 next month and I'm so depressed. And it's like, count your blessings, you're going to have Medicare and it's the best thing ever. Which it is, and it's clearly not expensive. I mean, you have the Part B premium and you have the supplement premium, and then you have to buy a drug plan. And the hardest part of trying to sell Medicare is trying to explain the Part D drug plan. You know, I guess the government feels that they're doing something for people, but quite frankly, it's really not, in my estimation, it's not enough. As you know, there's a maximum of $2,840 a year before you reach the donut hole. And that $2,840 is reached not only by what you pay, but what the carrier pays. So in many instances, people can reach that in March or April. So then here's,
In January.
oh, well, sure, depending, exactly. So $2,840 is really nothing for somebody who's taking, you know, $500 to $1,000 a month drugs. Once they reach that donut hole, there is no coverage for brand name drugs at all. You can have a plan that has coverage for generic drugs, but those plans tend to be close to $100 a month and are really of no value because brand name drugs generally are, you know, $10 or $15 hopefully. So why spend the extra money for something that you're really not going to use? Once you reach the donut hole of $2,840, I believe there are some benefits to getting discounts on your drugs. When you reach $4,550, you then are out of the donut hole and eligible to either pay 5% of whatever the drug costs, or $2.50 for a generic drug, or $6.30 for a brand name drug. So there is some advantage to that. But as I see it now, most people reach that donut hole at $2,840 very early on, maybe in 4 to 6 months.
She has something that she wanted to add?
Yes.
With the new rules
Sure.
for the donut hole?
Of course.
Well, actually, for Part D in the donut hole this year, it's changed. Last year, there was no assistance in the donut hole, so you did pay 100%.
Mm-hmm.
Now, if you fall into the donut hole, there's a 50% discount
Right.
that's provided for the, sorry. There's a 50% discount that's provided for the brand name drugs, and with the generic, it's 7%.
Mm-hmm. Okay.
I just wanted to say that.
Thank you very much. The other thing that I want to discuss with you that Ben touched on was the major risk plan, which is also for people who have not had COBRA and have had no insurance and do have medical conditions. And this is a plan that's funded by tobacco tax. And at one point, there was a waiting list, but I believe now it's open. You have to be declined by an insurance carrier. Once you have that declination letter, you make an application and you can go into it. But again, it's only got a $75,000 maximum per year. And if you have something really serious going on, I don't think this is sufficient. What the answer is, I don't know. I would say that if you have individual or family health insurance at this point, if you're under 65, it would behoove you to keep it until, regardless of the fact that it's increasing every year or twice a year. I don't know what's going to happen in 2014. We have no idea. Obviously, if you have your own plan, you have your own plan. It would seem to me, and I know I'm doing this, I have clients who start at a $500 or $750 deductible, and right now they're at a $5,500. And there's a point beyond which you can move people down. At this point, I think the only solution for people who have individual health insurance is to just bite the bullet and keep it until we see what happens in 2014. And just keep lowering your benefit, or increasing, I should say, your benefits and lowering your premium as best you can. And be grateful that you have it, because we don't know what the exchange is going to be like. We don't know what's going to happen. Thank you.
Our next presenter is Stephanie Thompson. And for 4 years, Stephanie Thompson has been the HICAP coordinator with the Council on Aging Silicon Valley. Stephanie is a state-certified health insurance counselor and community educator. Today, Stephanie will introduce the services provided by the Council on Aging Silicon Valley. Please welcome Stephanie Thompson.
Generally, what I would come up and do is actually speak on Medicare alone, because that's what I do. I deal with Medicare every day. But since we've had so many people touch on it, what I'm going to initially talk about is Council on Aging. And I don't know how many of you are familiar with that agency, but it's an agency that generally deals with the senior population and their caregivers, whether it's a family member or someone outside the family, trying to assist the individual in staying at home, self-sufficient, living a more productive life than they would, say, in a nursing home. And on that note, what the agency provides is a series of different services. Everybody here has this little oath out. Okay? And inside of it, it lists all of the different services that Council on Aging provides. Some of these may actually pertain to you after having, say, a kidney transplant, such as needing someone to come into the home, a caregiver, someone to assist you in that form, or the inability to provide for yourself in cooking and things like that. So we have a department called Meals on Wheels. And its specific duty is to provide meals for an individual who is considered homebound. Okay. We do have care management, which is they plan and arrange care for individuals who have a broad spectrum of needs to be provided in the home. We have in-home services, which is a department that provides a caregiver for individuals who have qualified for Medi-Cal. The key is you have to have Medi-Cal, and that's something that I'll talk on a little later about how to go about being eligible for that particular benefit. So what would be provided is someone who could come in and do domestic things for you, or take you on errands if need be, or if you are in need of someone to cook, whatever the case may be, okay, until you're better off and able to do for yourself. Senior employment, don't know if anyone here would want to work, but for those who do intend to go back to work after a transplant and may be in need of a position, and they are 55 and older, that is something that that agency can help you with. We have information and assistance, which is a department that has all of the information on services and programs here throughout Santa Clara County, whether it's a legal service, transportation, medical, housing, repairs, it doesn't matter. We have information on services to assist with the payment of your rent for the month or your PG&E, a lot of different things that may come up, and they do come up quite frequently for some. We have our community outreach, which is, we have our GRC, which is our general recreational vehicle that we take out to different facilities and bring our services to the general public. We go to community centers, companies, agencies, and either present our services as a whole or present our HICAP services. And HICAP, for those who don't know the acronym, is Health Insurance Counseling and Advocacy Program. We're also known as SHIP, and that's what I am. I happen to be a counselor as well as coordinator. And I would generally go out and speak to the public as I'm speaking today. But what I also do, and my fellow counselors, is provide information on Medicare, which I've heard a lot of information being thrown out today, very good information. Not only do we provide information on Medicare, but we also provide information on Medi-Cal. We can help an individual who is not quite sure whether or not they can qualify, determine whether or not they're eligible. We can also help them apply. We can help them apply for the Medicare savings programs that assist individuals with the cost of Medicare, okay? We also provide what we call comparisons, and that has to deal with the Part D of Medicare, okay? So what we would do for an individual such as any of you here who have medication, who are looking for a specific prescription drug plan that would cover all of your medications, is do the comparison, which is to enter all of your drugs into Medicare.gov's website. And what that does is give us back all of the plans that are available to you in Santa Clara County. And in doing so, it would give us a list. And the list is thrown at us from, we say, best to worst. Best meaning least expensive for the year, hopefully covering all of your medications, to most expensive for the year. And when we go into that, it actually gives you a complete breakdown of what your monthly costs would be, premium, deductible, cost of your medications at the pharmacy, or if you choose to do mail order. And then it will show you where, if at all, you'll fall into that donut hole, okay? So it's a very good program. It's a very good way to assess what your costs will be, so there are no surprises. And what it also does is let you know what drugs specifically would be covered by any plan that you chose. There are some plans that are not covering quite a few brand name drugs, and so they're insisting that you choose a generic. I don't know if any of you have fallen into that situation, but it seems to be happening a little bit more and more. Now, with the donut hole, it initially was stated that there is no assistance from the plan, and as you heard, I did make that correction. There is 50% assistance. They say a discount for the brand name drugs, and then a 7% discount on generic. Okay? You do end up spending $4,550 to get out of the donut hole, and when you are out of the donut hole and fall into catastrophic, the plan kicks in more efficiently and pays 95% of the cost of your meds. Something else that was touched on was Mr. MIP and a few other means of getting insurances with pre-existing conditions. Mr. MIP, I kept hearing that you're not able to get Mr. MIP if you have Medicare, and that's not necessarily so.
No.
You can get Medicare, Mr. MIP with Medicare. I have a lot of clients who are Medicare and looking for insurances are being turned down because they have end-stage renal. And they are turning to Mr. MIP, and they are being accepted. Okay, so the criteria is you need to be turned down. You need to be denied by another insurance, and they will accept you. Okay. It was stated by Betsy that Medicare is a maze, and she's quite right. It's a very serious and confusing maze to many people. I want to emphasize that with HICAP, we're here in Santa Clara County. We provide this service to each and every citizen here in Santa Clara County. Our services are totally free. And the purpose of us being here is to explain that maze. We sit with our individuals, our counseling clients one-on-one, and we will go through the ins and outs, the enrollment periods, the possible penalties for not doing what you should in the appropriate times, and then also to the different changes that are taking place. Now, in 2014, as it was stated, the pre-existing situation will hopefully be gone. In 2020, Part D, donut hole, hopefully will be gone. That's what's on our timetable. We're hoping that if everything goes well, it will be gone. Many of the changes that are taking place, some see as not a good thing, others see as wonderful. I'm staying totally unbiased and I'm just waiting to see what happens. Because right now it doesn't affect me, but I'm hoping whatever changes are made, will be very beneficial for everyone. So I really don't have anything else at the moment. So I'd just like to thank you for having me.
Our next and final presenter today will be Chris Douglas. Chris is a staff attorney with the Legal Aid Society of San Mateo County and has been with the organization for over 5 years. Chris specializes in disability rights with an emphasis on public benefits. He speaks throughout the state on access issues related to dialysis and transplantation and has trained thousands of clients and providers on public health insurance options for dialysis patients. Please welcome Chris Douglas.
Thank you so much for having me. You guys have gotten a lot of information today, so I'm going to try to, typically it's always a good idea to have an attorney go last, because then I can, be as long-winded as I want, but I'm going to resist the temptation of my discipline to be long-winded, and I'm going to be brief. And there's just a couple of things I want to touch on. So, there's a lot of services available for folks who are disabled, who have ESRD or have had transplant, and a lot of people, it wasn't an understatement when Betsy mentioned the MAIDs, because these programs are really complicated. What I tell my clients all the time is that I'd be more worried about you if you were understanding all the rules. If you're not understanding them, that just means you're normal, because these rules are inconsistent. They use different terms to refer to the same thing, and from a regulatory perspective, they're a mess. Part D is a great example. The way the regulations, I'm sorry, I'm going to be all nerdy on you guys, but the way the Part D regulations are written aren't like anything you've ever seen before. I mean, they don't make any sense. It's essentially someone asks the pharmaceutical, insurance company what they would like as a wish list, and out comes these rules where you have to pay an initial deductible and a donut hole and all this stuff. And what it really, when they mention catastrophic coverage, the whole thing is a catastrophe. And what you get as catastrophic coverage is what you should have gotten the whole time. That's an editorial, but whatever. It's a Sunday, right? So I'm wearing a suit, so I can say what I want, right? So that being said, there is an important piece that everyone should know, and that's that there's help out there, right? So there's legal aid societies all throughout the state who specialize in sort of understanding these complicated rules and can provide assistance and advocacy for folks. But there's also a whole other group of people who can provide advocacy, and that's yourselves, right? So a lot of the reasons why these programs have been challenged, and one of the reasons why health reform came together was because people stood up and said, you know what, it's a bunch of BS for these companies to be able to do what they want. The pre-existing condition exclusion, in my view, is discriminatory. So you could be on Medicare, you could have Medi-Cal, and if you wanted to join one of these Medicare HMO plans or Medicare Advantage plans, you were specifically excluded under federal rules from joining a plan like that. Now, if that's not discriminatory, I don't know what is. And one of the reasons that's going away is because people like yourself stood up and fought. So, there's a couple take-home messages. The first one being, if you disagree with something, stand up and fight. You don't have to do it alone. That's the second message. And the third message is that you need to utilize the tools in your community, right? So I work in San Mateo County, and not every county is going to be as well covered as San Mateo County or San Francisco or some of the more sophisticated counties. But wherever you are, you have to seek out who are the people that can help you when problems arise. Now, can we solve every problem? No, but we'll try. And that's a big thing. I mean, I think for a lot of my clients, it's less about success and failure, more about standing up and fighting for something you think is right. And in a lot of those cases, I've won cases I probably should have lost. A story that comes to mind that's a great example of this. There was a gentleman who was on public health insurance, and through no fault of his own, he lost his linkage for private health insurance, which was corrected really quickly. But on the transplant list that he was on, he was dumped. He was literally just dumped after he'd been on the list for almost 5 years, and the transplant was imminent. You know, we had to do all kinds of stuff to get it resolved, in addition training the hospital administration on how public health insurance works. You know, so you know, luckily Betsy and all her team have been very well trained, I think. Excellently trained, right? By me. So excellent training, very thorough. But what's important is that you're not going to have that level of sophistication everywhere. You know, like as it was mentioned, these rules are so complicated. If you're having a tough time understanding them, you know who else is having a, this is a huge secret, by the way, so don't tell anyone outside this room. The agencies themselves, they don't understand them either. Medi-Cal, the people who administer Medi-Cal don't understand these rules well. The people who administer Medicare don't understand these rules. The insurance companies who fought to have these programs be in place don't understand the rules that they fought to have in place well either. You know, so you could have Part D and make a very valid request for an exemption on a drug, and they won't know what you're talking about. Yet they're the ones who pumped, you know, billions of dollars to get that rule in place. So, you know, so don't be discouraged. You know, I think, you know, there is advocacy out there, and I would encourage all of you to, if you have a positive experience and you see someone who's not having a positive experience, talk to them, refer them. You know, there's powers in numbers, and I think, you know, for whatever, from a totally non-political perspective, what you see in health reform is really, it's really a culmination of a lot of groups coming together and saying, you know what, I'm tired of this. These companies are making too much money and we're getting too few services. It has to change. You know, and it's changing, for better or for worse. I'm going to keep it apolitical, but for the most part, people who didn't have any access to anything are not going to have access to something. I don't see how that's ever a bad thing. On the Medi-Cal side, there's some important things I just want to touch on. And, you know, we talked a lot about Medicare. You know, Medi-Cal is going to change dramatically for the better in 2014. Currently, to be eligible for Medi-Cal, you need to be the type of person that Medi-Cal covers. Medi-Cal would not cover everyone. Myself, I'm a single adult who's not disabled, has no mind, is not a single parent, was not a former foster kid, do not have tuberculosis or breast cancer, right? I am not eligible, even if I'm the poorest person in the county that I live in, because Medi-Cal isn't designed to cover me, right? To be eligible for Medicare, you need to be not just low income, be a resident of California and have satisfactory immigration status. You need to be the type of person that would cover. So if I'm not a single parent, a child, foster child, a disabled adult, or an older adult, Medi-Cal is not an option for me. In 2014, they're getting rid of that categorical eligibility. So as long as you're low income, you're going to be eligible, and that's going to be really great for a lot of people. It's a total change in the whole landscape of public health insurance. And in San Mateo County alone, they're expecting almost 30,000 more people to be eligible. Now, why is that important? It's important because Medi-Cal would cover anything that Medicare doesn't. So you talk about the coverage gap that you have with Part B, right? Medicare will cover 80%, you'd be responsible for 20%. If you have Medi-Cal, Medi-Cal would cover that. So that's not a bad thing. In addition, you know, Medi-Cal opens up a lot of doors for either in-home supportive services. It can give you eligibility, fast eligibility for Meals on Wheels and, you know, adult day health, a lot of things that are positive. So if people are eligible, they should definitely seek that. But until then, we still have some time to go. It's important that people understand that if they have end-stage renal disease, they would be considered under compassionate disability or Social Security Administration disabled. And they could get benefits right away. They wouldn't have to wait 2 years for their Medicare as you would under most other disabilities. And it's something to start the process. It's a process that, you know, if your treating nephrologist or whatever is willing to verify your end-stage renal disease status, you can essentially be put on disability benefits really quickly. That disability determination would also help you get Medi-Cal, because you would be disabled and eligible for Medi-Cal as well, as long as you are income and resource eligible. Like I mentioned, you have to be low income. But the combination of those is really, it's really something that can help people make sure that they stay on these transplant wait lists, get payment through the transplant, and then they have coverage for 3 years afterwards. Now, the 3 years afterwards, that's where science and public policy break down in a very unfortunate fashion, because as you guys know, these medications you have to take for the rest of your life. And after 3 years, if Social Security thinks in their infinite wisdom that if you've successfully had a transplant, then you are no longer an end-stage renal disease, which technically is true, but you also will go right back to that if you stop taking the medications. So there's a lot of tricks, not tricks, loopholes. Call them loopholes. No, actually, let's call them tricks because that's what they are. It's Sunday, right? There's a lot of things that people can do. For example, trying to find that there's another disability to keep those benefits going. So, for example, most of my clients after 3 years, all of a sudden they have hypertension. And, it's sort of collusive, and we have the doctors, are they going to be hypertensive sometimes? So we try to keep that going as long as possible. That's the most important thing. One of the things that I've been working, myself and people much smarter than me have been working with the state, is creating a program similar to ADAP, which is the AIDS Drug Assistance Program, where anybody who has HIV can get access to medications, which came about, lots of advocacy, a lot of people fighting. Wouldn't it be great to have something similar for people who had transplant, right? So that no matter what happened, there would be a pot of money set aside to people to get the medication that they need. That's still in the works with current budgets and stuff, not holding my breath, but that's something, there's people thinking about ways to resolve a lot of these problems. That one being something that's so important. But like I said, I think the take-home message, I'm sure you guys have a lot of questions, is really that there is help available. For the most part, if people are getting denied benefits, that's when a legal aid society or some advocates in your community would be able to help you. If it's applying for benefits, you just need to go apply and get that denial, and then someone can look at it to see if it makes sense. I can't tell you how many times people get denied and it's wrong. But if you don't do anything about it, if you put it under your bed and think that in the morning you're like the tooth fairy, you're going to be magically accepted, it's not going to happen. So people do have to fight, and in my experience, a lot of these appeals are successful. Because the rules are really complicated, the people who made the decisions didn't understand the rules as well as a free attorney can. And the services are for the most part free. So, my services are free, but depending on different agencies, they might be a fee. But for the most part, all these services are free for folks that are in your position. I think with that, I'll end, and we're going to open it up for questions.
Who has a question they'd like to ask of someone on the panel?
I'd like to ask the panel, anybody, could you detail Medi-Cal a little more about income qualifications, if you own a car, if you own a house, that sort of thing?
Yeah, why don't I just handle that one? So to be eligible for Medi-Cal, as I mentioned, you need 4 things, right? You need to be a resident of California. You need to have satisfactory immigration status. People that are undocumented are not eligible. You need to at least have a green card to be eligible for Medi-Cal or be a citizen, or a refugee or an asylum. You need to be low income. There's a ton of different Medi-Cal programs. For the most part, for you guys, I'm going to just mention the disability programs. For a single adult to be eligible for Medi-Cal who's disabled, they need to have monthly income of less than $1,133. That's to have free Medi-Cal with no share of cost. In addition to being low income, you need to have low resources. So certain things are exempt, but for the most part, if you have more than $2,000 in savings, you're just flat out not eligible. So people would have to spend down to $2,000 to be eligible. $3,000 if you're a couple and $3,000 if you're over 65. What's important is that if your resources are low, and certain things are exempt. So if you own a home and you live in it, that's exempt. If you have 2 homes, the second home's not exempt. If it's rental property, there's ways to play around with that I'm not going to go into, or else you'll all start falling asleep on me. A car is exempt. You have 2 cars, the value of the second car counts as a resource. Personal effects like jewelry or heirloom furniture or whatever, that doesn't count. We're really talking about if you have some sort of annuity out there, if you have 401k, different things would count against your resource. Now, if assuming you're resource eligible, if your income is above $1,133, you're still eligible for Medi-Cal. But instead of having free Medi-Cal, depending on your income, you'll be assessed what's called a share of cost. Now, share of cost, that could be another hour, so I'm going to make it as brief as possible and people can ask me questions afterwards. But share of cost is a monthly deductible that renews every month that you have to meet by incurring medical expenses in order for Medi-Cal to cover you. So if you have a $600 share of cost because your income's too high for free Medi-Cal, you would have to either pay for or have received $600 in services before Medi-Cal pays anything. So sometimes that's not that bad, right? If you don't have any chronic, there's some people in this room, but if you don't have chronic diseases, you know, and you have a $600 share of cost, you just make sure in that 1 month you have your brain surgery, your foot surgery, your arm surgery, you know, go to the chiropractor, it costs $1 million in services, you'll only ever be responsible for your share of costs and Medi-Cal will pay the rest. Where it's problematic is that if you have, let's say, $1,000 share of costs and you have a chronic disease, you have to go to the doctor every month, and let's say the expense is $500 a month, that's a bill that Medi-Cal is never going to pay, usually. This is where it's good to be a lawyer and be one of the only people who knows about this stuff because it keeps people interested. So if you're disabled and under 65 and you're able to do any little type of work, we can get you into a different program that you wouldn't have a share of costs. If you have unpaid medical bills, there was a lawsuit that came down a bunch of years ago that allows you to aggregate those medical bills to clear share of costs in a future month. So there's a lot of things that can be done. If you have share of costs, if you have Medi-Cal with a share of costs, I would urge you to talk to a legal aid attorney or something who can see if there's some programs that might be more beneficial. But I'm going to my old lawyer stuff, so I'm sorry if I'm being super long-winded. Does that answer your question?
Yes, thank you.
And,
I understand if you're on Medi-Cal and you pass away, then they assess your house.
That is a myth.
That is a myth.
That's a partial myth. If you receive Medi-Cal services past the age of 65 and you die, your estate has to send a claim. There's a third-party claim that goes to the state of California to determine whether they want to try to seek recoveries for payments that you received just past the age of 55. There's a lot of things that make that not be triggered. If there's a surviving spouse, it doesn't happen, and it's gone. That's it, it's gone. If there's a disabled adult child, it doesn't happen. But then afterwards, it isn't an automatic thing. The state then decides whether they want to go after a portion of the estate to recoup expenses, and there's an opportunity to challenge that. So it isn't an automatic thing. There's a lot of people who are afraid to access services, but what I tell people, you're going to die much quicker if you don't access the services, so don't even worry about it. Let's worry about, getting everything that you can get. That law came into effect because of people receiving long-term care. That's typically the people that they're going after, people who receive long-term care for a long time. As you guys know, the Kennedys have Medicaid pay for their long-term care. Why? Because there's a bunch of fancy lawyers who came up with all the rules, all these loopholes, so that instead of having, typically you would have to spend all of your resources before Medi-Cal would begin to pay your long-term care expenses. Fancy lawyers got together, came up with all these different ways to shelter that money so that the state and the feds pick up the tab instead of the individual families. So Medi-Cal, this happens, federally, they try to recover some of those expenses afterwards. But like I said, it's not automatic.
And if you live in San Mateo County and haven't done so already, you might want to consider making Chris Douglas your new best friend.
Quick comment, I think. If it's possible for the panel to repeat the question.
Okay, thank you. Ben had asked for the panelists to repeat the question after it's asked. Does anybody else have a question?
So the question is, we've talked a lot about all these ways to address coverage, but the question is there any effort to actually reduce the cost of healthcare?
Yes.
Okay. Yes, there are, and actually a large portion of the Affordable Care Act and the Obamacare and this whole discussion does center around that, and some of those are in fact the the more controversial aspects of the provision. Like I said, from an uninsured standpoint, it's a lifeline. However, a large portion of the care, and Chris, correct me, of course, jump in if I'm repeating something wrong, but essentially, I think the biggest portion of the cost of the expenses is large cuts in Medicare reimbursements over the next 10 years to providers. And this has a net effect of essentially forcing physicians to reduce their costs. And it's quite a challenge for physicians and clinics and hospitals to try to meet the demand of both increased people, the large number of people who are going to be covered, who are going to be seeking access, but at the same time, the reimbursements are going to continue to drop. This forces physicians to seek more creative ways of reducing costs, which include a variety of things. For example, part of the law requires, actually encourages the adoption of electronic health records across the board for hospitals, which you wouldn't believe it, but adoption of electronic health records across the country is something ridiculously low, like below 10%. Those of you who come to Palo Alto Medical Foundation, you know that we have electronic health records here. We're very much in the minority. Having those will definitely increase the efficiency of the system. There's also efforts to start switching things from fee-for-service, which is essentially physicians billing on individual components, to more of what the hospitals are operating under. If you go to a hospital, the hospital essentially gets paid in a bundle. So if you get hospitalized and you're going in for a transplant, they look up certain rules. Says, okay, you're a part of this diagnostic related group, and no matter what you do, this is how much you get paid. Okay, the hospital gets paid a certain amount based on your diagnosis, and this has the effect of making the hospital become really efficient at providing care for you, and it takes away the incentive of over-treating patients. There's going to be more of that shift in that area. And there's a whole variety of other effects in that you could spend hours going through it. But the answer is yes, there are efforts underway. But because fundamentally you're talking about reducing costs, which necessarily forces people to economize, those are in many ways controversial. Is anyone else to find out?
So I would just reframe that. I think you're absolutely right. I would reframe it in terms of reducing waste, not reducing costs. For example, if you go to under your current system, if you go to your cardiologist, for the first time, the cardiologist doesn't see you. The cardiologist sees about $7,000 of billable expenses that he or she can get from you, right? Because under the current rules, can do a stress test, can do the EKG, can do all that, and one follow-up, that's about $7,000. That's what they see. Right? That might not be what you need. You might have been referred to a cardiologist because you had chest pains. That doesn't mean that you require the whole spectrum of services to rule out everything under the sun. So what health reform and what these rules are trying to change, they're trying to change the provider incentive, not necessarily reduce they're reducing the rates by changing the incentive. And the incentive is preventative, right? So since doctors don't have that much trouble sleeping at night, the systems should ensure that preventative services are adequate and that treatment services are necessary. So that's really where that's sort of just shifting sort of the language on that, but we were saying the same thing.
No, I totally agree. It's changing ultimately the incentives.
Other questions? Yes, sir.
For Chris, is there a financial test to use legal aid services?
Well, if you make more money than me, I can't help you. I'm just kidding. No, for the most part, the services are free, and if you have a disability, the rule that I have for my legal aid in San Mateo is that anyone who's disabled can see me at least for advice, and then depending on your level of income, will determine how much services I'm able to provide. And for the most part, that's how the legal aids will operate. We usually, low-income and disabled folks are sort of our core. So if you consider yourself disabled, that would be enough for me and for most legal aids.
And other questions?
Okay, the first question was, can dialysis patient under the age of 65 get Medicare supplement? And the second question, are the premiums the same across the board? The answer to the first question, are you able to get a Medigap supplement? No, you'll be denied as an end-stage renal patient. You'll receive your Medicare because of the end stage, but you'll be denied by any carrier. For an individual who is disabled, and we're going to just take out the issue of end-stage renal, and they were looking for a Medigap supplement, the premiums are not the same across the board. The younger you are with a Medigap, the more you pay. And disability allows you to become Medicare. You're under the age of 65. Someone 65 may pay $110 for a Medigap premium. That younger individual, say age 25 or even 50, might pay anywhere from $190 to $250 or slightly more depending on the plan they chose. So no, they're not the same.
All right, thank you. And any other questions?
The question was, when you enter in the medications into the Medicare.gov website, pretty much what are the criteria that you're looking for trying to determine your medications? And are you focusing on what you're presently taking as opposed to what you may take in the future? You can do it either way. You need to include what you are taking, but if you know that you're going to possibly be given other medications because of a particular illness, and sometimes your doctor will say, I want to try another medication for you in a couple of months, definitely. You can enter all of the present plus what has been mentioned to you. And then what will happen is, in the website, it will kick back, as I said before, least expensive for the year, which is the default setting. Least expensive for the year to most expensive. And there are a lot of things to take into consideration when you are trying to determine what plan to take. You definitely want to find the plan that's going to cover most, if not all, of your medications, regardless of cost, okay? But sometimes cost becomes the higher factor. And in doing so, what this plan does, what this system does, is it will give you the medications, where they are in tier, okay, with the particular plan that you're looking at, what the cost would be, whether or not there are issues such as quantity limits, restrictions, quantity limits, prior authorization, things like that. So those are things to take into consideration as well. If you're on a medication and you can't handle the issue of prior authorization being required, because sometimes that's a delay, and that can cause you not to get your medication literally for a month or two. It's happened to me in regards to my daughter. So, you know, those are things to take into consideration. You do definitely want to be concerned with customer service and those types of issues with regards to the plan. But generally speaking, customer service tends to be on the lower end of concern. Top priority, does it cover your drugs? What is the cost going to be? Where am I going to fall into this notorious donut hole? And if you're on expensive medications, it's going to happen. And then, you know, how am I going to handle that? And you can actually plan that out. And what we do with the Council on Aging here at HICAP, we will actually give you different ideas on how to approach using your plan. A lot of times you can manipulate the plan by getting medications elsewhere, and that way pushing the donut hole out or avoiding it altogether. So there are a lot of things to consider, and as I said before, we'll help you with that. Our service is totally free. There's never a charge for our counseling, never a charge for our comparison assistance. So.
Make a side note?
Yes.
Let me make a side note here that is actually unrelated to the financial aspect of it that Stephanie just went through. I have learned, and please note, that as far as transplant medications are concerned, specifically Prograf and CellCept, there are generics available. And for the most part, pharmacies will try to automatically fill your orders with the generics depending on your policy. But please note that the generics are not exactly 100% identical, although the active ingredients are. I would suggest that before you go on to generics for transplant medication that you check with your nephrologist. As far as I know, based on the studies done so far, that the results are the same. So they are, they are absolutely effective at, staving off rejection. But that said, for those two medications, the bioabsorption rates and the way that they are brought into your body is slightly different. So do consult your nephrologist if you're under, if you are considering changing to generics. So that should be another point of consideration in this whole discussion.
Okay, and
Can I add
Oh, yes.
something to address your question before?
and then we'll go to this gentleman.
Were you thinking that, comparing drugs for dialysis and then finding out, you're gonna be taking different things after transplant? Is that more of the thought that framed the question?
No, I just kind of had a thought in my mind that maybe people might have their medications change as their renal disease progresses. I wasn't thinking anything specifically,
Okay.
and how they can plan that out for the year.
Okay, so that would be an example going from dialysis to transplant where the medications would change quite dramatically. And so what you can do in that case to figure out which one of those Plan Ds would be best is to contact the financial coordinator at the transplant center where you're listed. And they have a lot of experience in doing that and they could help answer that. And I'm not sure how easy it is to change Plan Ds once you're enrolled in one.
Oh, well, so as to that, which is what the side note I was going to put to your side note, was that if you have Medi-Cal, you can actually change plans as often as you want. So basically like monthly, you could change a plan. So if you were enrolled into a plan that wasn't working for you, you could change it any time. In addition, you'd be eligible for the low-income subsidy if you had Medi-Cal, which would help pay for some of those costs and the premium payments and stuff for Part E. If you don't have Medi-Cal, then you would only be able to change if there was some sort of special enrollment period that you became entitled to, or during the general open enrollment period, which is from November to December. November 15th to December.
No. It's actually changed. It's now October 7th to, October 15th to December 7th. And that is if you have full scope Medi-Cal, can you change literally once a month? Not if you have Medi-Cal with a share of cost. Unless you've met your share of cost and you now have acquired LIS, which is extra help, which is a whole nother.
Okay, and the last question,
Okay, the question was when you enter your medications into Medicare.gov, does it differentiate between brand and generic? You have the option of putting in the brand or you have the option of putting in the generic. Whatever drug you put in, it will give you the price for. And we can do the comparison and put, run different comparisons with the generic along with the brand, and you can see the differences.
okay, well, how about that? This was, okay. Last question?
Thank you. I came in late, so we might have covered this, but we're involved with Mr. Mipp, and we were wondering if, what state is that plan in at this time with California's financial issues? And I apologize if it's been covered already.
Well, it still exists.
Can you say again what this Mr. Mipp is?
What is Mr. Mipp?
Yeah, so Mr. MIB is a program of the state, it was mentioned by Ben before, that provides sort of catastrophic coverage for folks who aren't eligible for anything else. It's sort of the California high-risk pool. So for people who would be denied from every possible insurance to still require care, then the state would provide some coverage to them. Mr. MIB also administers the Healthy Families SCHIP program for our children, health insurance for children. And then there's a Spanish component to Mr. MIB, it's called Señor MIB. Just kidding. They can't all be winners. But Mr. MIB still exists. Mr. MIB is actually going to be key in federal health reform implementation in California. So we anticipate it remaining, not going away.
Okay. Well, I suspect if you have any other questions, you are welcome to ask on a one-on-one basis your question with any of the panelists who will be sticking around. And I know that this is an enormous amount of information, and the good news is that there are resources and people here to help. We hope that this has been informative today and that you are emboldened to reach out to those resources that are here and elsewhere in the community to answer some of these difficult questions and untie some of these challenging knots. I'd like to thank Chris Douglas from the Legal Aid Society of San Mateo County, Sandy White of Allied Brokers, Betsy Bucter of California Pacific Medical Center, Ben Lee, and Stephanie Thompson of the Council on Aging, Silicon Valley. They have been wonderful, and let's have a round of applause.